Now, joining me to shed more light on this development is the Executive Director, Capital Market Division at the Nigerian Stock Exchange, Mr. Aruna Jallo Waziri. Good morning, Mr. Waziri, for your time.
Good morning, madam.
There's a whole lot of figures to be understood about our investing public. Just take us through what this adjustment really means.
Well, if you notice, our fixed income market has not been very active. And so we felt that the way to actually ginger it is to go out there and listen to what the issuers are saying and the advisors. What we hear from the issuers is that our market is slightly expensive. If we wanted to increase the amount of listings and encourage issuers to come to our market, we'll have to look at our fees. And also from a trading perspective, we wanted to incentivize the market to begin to see how trades can come into our market as much as possible from a retail perspective. And so we decided to, take a look at what our fee structure was, review it holistically, as you've said earlier on, a lot of numbers. But if I take you through what those numbers are, what we've done is we've discounted our fees anything between 66% to about 100%, indicating that we really want to be a listing exchange and also encourage new listings as well as trading as much as possible. Apart
from the fact that you're trying to make listing attractive to those who are interested, does it mean that the macroeconomic headwinds of the country is being felt by some of these companies, and so the need for them to pay a lower fees to enable them be part of the market?
Certainly. We can't divorce ourselves from what is happening in the economy currently. And again, capital raise is supposed to be, especially on a long-term basis in our market, should be at least as cheap as possible. And so issuers are beginning to say, look, we want to raise capital, but we don't want to be as expensive as it used to be. And also from a brokerage perspective, we felt brokers were charging very minimal fees, and probably there's no incentive for them to go out there and get trades. So that informed those decisions from both the primary market, which is the issuance, as well as the trading.
Once again, I would like you to take us through the numbers because a whole lot of information need to be given to the public. If you could just tell us those specific rate cuts that you made. Can we call it rate cuts?
So for
specific listings and for specific trading on the market.
Certainly. So for the trading fees, there's no charge. That trading fee, from our own perspective, has been abolished. So that's number one. Number two, the brokerage commission used to be 0.005. We've asked brokers to charge up to 1%, depending on what the negotiation is with them and their investor. And then when it comes to the listing application fees, we have discounted for exclusive listing of the exchange, our own brokers, our own issuers, to up to 93%. So there's a discount of 93.33% from what it used to be. The second category is corporate bonds who are dual listing with existing equity listing. We've discounted it by 75%. The third leg is other corporate bonds that don't have a listing on our market but then also want to come and list. We've discounted that by 75%. The last part is state and supernational bonds. We've also discounted that by 66.67%. So you'd see that there is a whole retinue of discounts starting from about 66% to almost 100% in terms of the fees that we're discounting.
Are there particular segments of the market that you want to really attract? Because corporate bonds have not been so much in force in terms of how they participate in the market. Do you think this would, in a way, attract them?
Certainly. So, for example, while we discounted up to 93% for our existing issuers, is if you are listed on our market and you want to issue another instrument, then the benefit should be that because you are an existing listing and discount the fees for you because you're already in the market. The second part is to encourage others to come from a one-time, listing, and say we'll discount up to 66.67%. So for us, it's more of how do we sensitize ourselves to our issuers, and how do we make business very easy for them, because they're all looking for capital for expansion and all of that. So we believe that that's our own contribution to expanding the economy, if you like.
And this would help boost liquidity in the markets, I suppose?
Well, certainly we hope so, and that's why we're doing a trial for 6 months. Let's see how they react to this particular pricing, and then thereafter we can review or revert back to what it used to be. But certainly I have this feeling that at least from the feedback we're getting, issuers are a lot happier than they used to be.
Would reverse help? Because if you're going to reverse that, that means going back to where you started from?
Well, you know, the issue is around incentives, and when you give incentives, you expect that there will be some kind of feedback in terms of participation. So, like I said again, let's wait till 6 months and see what happens.
Okay, are there other things that the NSE authorities are planning to do to help boost market confidence, boost liquidity, and of course attract investors into the market?
So certainly there's a whole row of things that we're actually doing. One of the key things for us is advocacy around how can our issuers benefit from policies to expand their businesses. And that has been key and primary to what we're doing in the last couple of months. Secondly is around market structure that we're taking a look at and reviewing from time to time. And one of it is what you've just seen, a review of the fees. So the exchange is not sleeping. We are actually thinking around things like general investor awareness programs around the national, road show that we're planning and all of that. So yes, a lot of things, to be honest, that we're doing to ensure that we bring back that confidence in the market.
Okay, one more last question I'd like to ask you before I let you go is that this SSC has actually set the date for the expiration of the e-dividend, or rather fiscal paper dividends, if you want to call it that way, June 2017. How prepared is the NSE in achieving this? Well,
I think that has to do more with the CSCS and, of course, the registrars themselves. And I think it's a good thing that we're moving towards, a paperless dividend policy or payment. And I think, we have to have a hard stop in terms of the conversion. So I believe the CSCS is ready. I believe most of the registrars are. And I think the banks are, so I don't see why we can't achieve that objective.
So you don't envisage any hiccups?
There would always be, but then it's how we react to those hiccups that really matter. We would see that certain shareholders who never had a bank account will have difficulty in getting their dividends. But I'm sure the banks should probably start marketing those ones to onboard them and make them inclusive in the market as much as possible. And so we'll see some shocks, but I'm sure they will get over it.
Thank you so much, Mr. Haruna Jallo-Waziri, Executive Director, Capital Market Division at the Nigeria Stock Exchange. Thank you so much for coming on the program.
Thank you.